Well, hello, everyone. Looks like we're now into March, believe it or not. 1/6 of the year's passed. And an interesting year it is. So there's an old Chinese proverb that says, may you live in interesting times. And that seems to be where we are now with everything happening in the Mideast, with what's happened in Venezuela, with Maduro. And so we got a lot of unrest in the world right now, which is causing markets to really move up and down in many different ways. So when we look forward, we got to consider that volatility in with everything. We look at, say, from the beginning of the year till now, the S&P 500 was about 68.58 in January, first week in January. Now it's about 68.17. So what gains were that we had at the beginning of the year pretty much wiped out. We'll see if we got some stability now. Markets went down today. They've come back up somewhat. NASDAQ was 22,235 in January, 1st of January, and now it's 22,503. So that's actually gone up a little bit. Gold, now we've seen some more move in the gold market. Started January at 4,436. And as of today, it's about $5,126. 10-year Treasury stayed fairly stable, 4.16 in January. Now it's 4.05. That's a good benchmark for interest rates and loans and mortgages and things like that. Oil, that's a big one. It started January at 58.32 for crude, and now it's at 74.56. So with the prospect of the Mideast having the issues they're having, that's causing the oil markets to really show the stress. Now, that's going to ultimately show up at the gas pump and really everywhere else. So we'll see how that turns out. Again, I think a lot of this volatility is really, it's just part of our life in finances. And sometimes it's smooth, sometimes it's volatile. You know, I've often said that investing in the stock market is like walking uphill with a yo-yo. It trends up, but it's up and down all along the way of the upward trend. And we're seeing that, which is why when you retire, it's really, really important to invest more for the I than the G, to invest more for the income than for the G for growth. And that's what we do at Sound Income Strategies. In fact, income's our middle name. So as we look at our clients' portfolios right now, this is the time where we shine because we're investing to prevent all these things going on from having a permanent impact on your portfolio. So we look at it every day, and we will look at it every day. So as you watch the news, don't fret because we're taking a lot of that into account and we've invested accordingly. So just remember that. Now, I know a lot of you will be turning 73 this year, and you'll come into required minimum distribution age. Those of you who've gotten the letters that said you've got to start taking it, don't worry, we'll be on that. We have required minimum distribution meetings all along the year. That's why we're here, folks. So when we get with you for a review, that's when we'll discuss it. In fact, just as a reminder for those who haven't come in since we made our move, we're now in building 600, Suite 307, basically right across the breezeway in Suite 307. So as I close here for this beginning of March video, just remember, we are investing more for income. So those dividends and interest, contractual, predictable, that's what you're looking for from us. That's what we're providing, is giving you some stability. You know, we're not there to make the home run hits. We'll take them when we get them. We're there to make the base hits to make sure that we keep scoring. So look forward to speaking to all of you soon as we get into our annual review season. And for those of you that it applies, beginning those required minimum distributions. So I want to thank you all for being clients of Retirement Income Source and look forward to seeing you soon.